Cues, we referred to them a while back. The GDP growth in the third quarter slowed for the second consecutive quarter to 4.4% versus 6.3% in Q2 and versus 4.7% forecast by our poll. But that's more because the FY22 and FY21 GDP numbers have also been revised higher. Lata is here with the key takeaways. Lata.
Well, that's the point. 4.4 is not a number we will be very happy about, but the point is the Q3 earlier and Q3 before that was so strong. They were coming out of lockdowns and Delta waves. And therefore, on that base, maybe we shouldn't grumble too much about 4.4. And as if to give us evidence about the previous year performance, both the years, GDP has been revised very sharply higher. FY22 GDP has been revised higher by nearly 2 trillion rupees. It was 8.7 we thought to growth, it's actually 9.1. And the year before we thought was a minus 6.6, it's actually minus 5.7. That's a huge revision, 90 basis points higher revision that we're seeing in growth. Now, what about the internals of Q3 itself? What worked was the services sector. The big one we call trade, hotels, transport, communication, broadcasting. That grew well at 9.7%. It was expected to because it was dormant for the past 2 years. Then construction has done exceptionally well. We can see it in the cement usage and steel usage. And likewise, utilities, power, gas, all those that we use on a daily basis. That's also grown 8.2, showing very strong growth. What didn't work? Manufacturing. Terrible. Minus 1.1. We were prepared for that. We were even expecting minus 2%. And that is quite clearly a weak consumption, weak exports, high raw material prices. Public administration, whatever government does, schools, defense, all that, even that didn't grow much, 2%. We know that the government is trying to reduce fiscal deficit. But if you look at GDP from not the output, but from the expenditure side, then you get the disappointment. Personal final consumption expenditure has slowed to just 2%. And we know that. I mean, we heard it from all the FMCG companies. We know that rural demand consumption didn't pick up. And that's, a terrible number. Government consumption also didn't compensate. It was minus 0.5. What worked really was capital expansion. Excellent gross fixed capital formation. 8.3%. So hopefully productivity in future years will grow up, but we should worry about consumption slowdown. Now we have to do 5.1 in the fourth quarter, current quarter, to reach 7%. Looks like a tall order given the kind of slowdown we are seeing in consumption, given the global